Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Veer Gidwaney, CEO and founder of Ansel Health. Ansel Health is a supplementary health insurance program that's designed to create a platform for employers to offer more coverage and less hassle to their employees. And with that, here's my interview with Veer. Veer, thanks for taking the time.
My pleasure. Thanks for having me, Jason. I appreciate it.
All right. Veer Gidwaney of Ansel Health. Tell us about Ansel.
Yeah, thanks for having me. I appreciate it. Ansel is a modern supplemental health insurance company, like you mentioned, that's on a mission to make sure that health hardships don't turn into financial burdens. We cover 13,000 medical conditions and pay cash benefits if any of those unfortunately happen to you. We automate the process of claims to make sure that people don't have to worry about getting their insurance, but instead can focus on their recovery and getting better.
Cool. Excellent. What made you start the company?
The passion behind this organization has really been founded on the problem that we're trying to solve that unfortunately gets worse every year. But most Americans, even on pretty good health insurance from their employer, are not able to afford an unforeseen medical event. And that's largely due to the fact that healthcare is expensive. But on top of that, most health insurance plans have pretty high deductibles. And so if you're in the hospital for an appendicitis or you break your foot, whatever it is, you're probably on the hook for thousands of dollars before your health insurance actually kicks in. So where does that money come from? It turns out for many folks, it ends up being debt. As staggering as it is, 100 million Americans have medical debt. And not just debt is the issue, but on top of that, just the expenses around dealing with an unforeseen medical event can be burdensome and throws up budgets. So our insurance aims to offset some of that and put money in your pocket at a time of need so that you can use it, make things a bit easier. And that's the problem that we want to solve.
Fair enough. All right. So we'll talk about how to solve that in a moment. So you basically saw that and you identified a problem. One of the top reasons people go bankrupt in the US is medical bills, unfortunately. You sought out to fix that. What was your idea on how you could fix it? And then how did you bring that to fruition?
So supplemental insurance is not a novel category. There have been products in the space for 30 years or so. I'm sure many of your listeners will be familiar with companies like Aflac or Guardian that offer these products, and there are dozens of them. And what we learned as we dug into the incumbent products is that they are challenged in a few main ways. But the most important is that they really just don't deliver a lot of value to the end consumer. And there are a couple of ways to measure value in an insurance product. Either one, it's highly utilized, or two, it returns a sort of a fair amount of money for every premium dollar you're paying, what's known as a loss ratio. And with the incumbent products, they're just really poor in both of those areas. So the first thing we did is to build a product that covers a lot more. So 13,000 conditions and illnesses is really 3x the incumbent products. So the utilization rate of Ansel is much higher. And the way we were able to accomplish that at a price point that is reasonable is that we pay less for certain major kinds of events, but pay something for thousands of things that may not be as major, but still happen quite frequently. And that key observation allowed us to build a broader product that is more useful to people day to day. So that was the first key innovation. The second innovation was around automating claims. And the way that we were able to accomplish that was to tie the insurance product as closely as possible to your health insurance. And the way that we did that was through what's known as an ICD-10 code or a diagnostic code. Why that matters is that every medical event anywhere in the world follows a global standard of how it's coded. So if you go to the hospital for an appendicitis, the code will be the exact same. We covered 13,000 codes. When we're able to receive medical claims data, which we often are able to get, then we can proactively and automatically pay the claim, which is not normal for insurance. Most insurance companies put the burden of proving that a claim is payable on the consumer. We don't do that. We take on the responsibility of proactively paying out a benefit because we know that something happened to you. And that ultimately leads to a far better customer experience. We see that in our net promoter score that's been in the high 80s now for almost 2 years, which is not normal for the insurance industry.
You said a lot of interesting things there that I want to go back on, but the last I'm going to talk about in particular is the insurance industry putting it back on you to get it done. Friction results in lower claims rates, right? Introducing a drug card actually resulted in higher claims simply because of convenience. So anything you do to expedite and make it easier for the person to actually file a claim results in higher claims, which can result in higher costs. But again, it depends on what your goal is. If your goal is to basically have people utilize it, especially because it's limited and you get paid on utilization, you're motivated to do that. Versus if you're traditional insurance programs and you want to be able to hold on to some of that premium, you're disincentivized from winding the claim.
Yeah. And I think those are all astute observations. And I think one way to think about this is to decouple property and casualty insurance from health related insurance. Now, in property and casualty, yes, as an insurer, you want to try to underwrite risk that reduces the probability of you having to pay out a claim. Whereas I think health insurance needs to be thought of a bit differently. And this has already happened and has been the case for 15 years since the passage of the Affordable Care Act in 2008, where medical plans or health plans have a minimum loss ratio. So they have to deliver a certain amount of value back to the consumer in order to be viable health plans. We think of supplemental health insurance very similarly. It is supplementing the health insurance. So it should, pay out some degree of additional value or reasonable value to the end user. I think a lot of bad behavior happens when we think of the term loss ratio, which is a very typical insurance term. But I think the behavior that it encourages is to minimize a loss. Every company wants to minimize loss. Makes sense.
This thing is framed as a negative. We're literally framing a payout of a benefit.
Right. And so in the world of health insurance, the payout of the benefit is actually the value, right? So if you're decreasing the value, making it a negative, per your point, I think that's counterproductive to what we're ultimately trying to accomplish. And the sad thing is that the traditional products are very profitable. They create this perverse incentive for those in the value chain to not want to change the way things are done because they're just making so much money from it. But at the end of the day, the people who are suffering are real people day to day dealing with these challenges.
Now, I want to go back to what you said earlier about how many things you're paying, and you're paying less on some stuff, but you're paying on just about everything. So talk to me about that thinking. Like, what informed that?
Yeah. So when supplemental insurance was created as a category, health insurance was very different from what it is today. So if you rewind back into the early 80s, deductibles were very low. So you didn't have a lot of out of pocket exposure on your health insurance. And so the purpose of supplemental insurance wasn't to offset that cost. It was really meant to be a protection against savings. For instance, if you had a heart attack and your critical illness policy paid out $30,000, that would help you deal with other expenses in life and make sure you didn't have to cut into your savings. If you fast forward now to 2025, the average deductible on a health plan is about $3,000 or $4,000. So that's problem number one. The second problem is that we've gone through 30 years of healthcare inflation. So the costs for certain things are significantly higher today than when they were in the past. So the problem is very different. But a secondary problem is to deal with not cutting into your savings. But a primary problem is I just can't afford this cash flow right now because my deductible is so high. So given that shift in the problem, the solution has to be different. And for the last 30 years, there's basically been zero innovation in supplemental insurance. The products have not changed in any material way. Came along.
That's the reality. Where's the incentive for change? Everybody's making, people
Exactly.
are getting paid for offering something different. Didn't require any new explanation. People were used to it. So that begs the question, where was your incentive?
Here in comes the burden of innovation and trying something different to help people out. We have a mission here that is positive, that's intended to solve this problem. We have a team of folks who are dedicated to doing something better. That's what we're trying to accomplish. Now, there's lots of forces working against us, that's for sure. In my view, why spend the effort and energy to build something from scratch unless you're going to solve a problem that is real and has an impact on people? So, that's our motivation.
Yep. All right. So that's your motivation. So let's go back to the entire covering less on some things, but more on everything. I guess part of it has to be the fact that the big things people think of are the things they want to get paid on. Fine. Okay. But there's a long tail of things that are maybe lower probability, less likely to happen individually, but in aggregate probably are pretty material. And if those things don't get paid on, then that can be the uninsured risk that knocks you off your pedestal. Was that kind of your thinking? Is that better to pay on everything, on a lot of stuff, and prevent the thing from happening than it is to basically just quash this one area of the industry?
Yeah, it's a fair point, but it's actually worse than what you're pointing out because many of the things that are not covered by the traditional policies actually also happen extremely frequently. So let's give you an example. Appendicitis and gallstones, pretty common things that we all know people who've had an appendicitis or needed their gallstone taken out. They're both, I think most people argue that they're both critical and they're illnesses. And yet most critical illness policies don't cover appendicitis and gallstones. There are literally hundreds of examples like that. Another one is pneumonia. Pneumonia is not covered by the typical critical illness policy. So this is partly about what you mentioned, but it's more about just doing what actually makes sense. These things happen, they happen frequently, they're costly, and they should be covered in a supplemental insurance policy.
So I'm curious, do you have any kind of breakdown of what percentage of your claims go to these things that are not covered by customary plans versus your standard coverage?
The vast majority. If you look at the 13,000 conditions and illnesses we cover, we put them into three categories: big, medium, large. The big ones are the things that are typically in the incumbent products, but all the medium and small are not. The medium and small actually are where we see the highest volume of claim receipts. We're paying out frequently $200, $500, $1,000. That's meaningful money for people who are often living paycheck to paycheck or certainly don't have a lot of emergency savings to pull from. We see this in the interactions we have with our customers. So often when you're getting a claim, we're calling you and not asking a bunch of questions. We're literally calling you to tell you to make sure you got the PayPal. So did you receive your benefit? It's an emotional experience because you're already dealing with an individual who's battling a health event that is clearly stressful and problematic in their life. And we're giving them a little bit of good news. Often the response we get is one where the recipient feels like we're doing them a favor. They're thanking us. But really, we're not doing anyone a favor. We're just fulfilling the insurance contract. We're doing our job. We're not doing anything beyond it. But
That's where the
meaning
bar
things
is,
to people.
unfortunately, that I was terrified I wouldn't get paid on because that's the conventional understanding of what's going to happen is the insurance company is going to try to weasel out of it. I'm not knocking insurance companies for what they do. I'm just saying that's the conventional wisdom is no one loves their insurance carrier.
Now, look, most organizations are not doing things that are nefarious. They're not trying
Yeah.
to not fulfill their obligation, although I do agree there are certain things that make it hard to file claims. But I think the more fundamental problem is they're actually following the letter of the policy. And the policy is actually not that good. So unless you read the fine print or unless your employer or their broker explains to you, hey, these are the limits of these products, then you wouldn't know. And understandably, most people don't read the fine print. And how would we expect them to? It's not a reasonable request or requirement. I think that's where some of the challenges are with the incumbent offerings.
Excellent. All right, we've talked enough about the claims aspect and how you're different from it in that standpoint. Let's talk about the experience, right? The employer wants to get set up. What does it look like for the employer? And then commensurately, what does it look like for the employee to get set up and get going?
For the employer, very straightforward because we're very much in sync with how they would buy and enroll in any other benefits. So typically an employer is setting up open enrollment with the help of their broker or payroll company. And during that open enrollment period, people are going through a platform, and in that platform, they're buying their health insurance, they're buying their life insurance, dental, vision, et cetera. We sit on those exact same platforms. We've not tried to make anything unique or different there. There's a well set path on how to enroll in benefits, and we plug into that. For the consumer, benefits fall into two categories in terms of how they're funded. Most employee benefits are funded by the employer, at least partially, or in some cases, fully. The vast majority of people pay a relatively small portion of their total health insurance premiums. Their employer is typically paying more than half of it. But there are a category of insurance products that are known as voluntary. Often it's these supplemental insurance products where the employer has said, I'm not going to fund these, but you as the employee can pay for it on your own if you'd like it, which by the way, is red flag number one. Why is the employer not willing to fund these benefits? Is there something wrong with them? That's for a separate conversation. But it puts the burden on the employee from their own pocket to pay for this. What we have found for our product is that 40% of our customers fund the Ansel benefit for their employees, at least partially, in many cases fully. So to your question of how do we make it easy for the employee to get it, the true answer there is by making sure they don't have to pay for it. And the way we do that is to demonstrate the value to the employer. And so how do we demonstrate the value to the employer? employers want to make sure that their benefit packages are well regarded. And one of the challenges they face every year is that because health insurance premiums are going up and they fund more than half of it, they need to find ways to keep those costs in check. And the single most popular way to keep those costs in check is to raise the deductible. So basically, reduce the value of the health insurance. So when we come to them and say, look, if you're going to have to do that, we could appreciate that maybe the only option you have, then at least take some capital to fund a supplemental insurance product that's going to help offset some of that high deductible if your employee ultimately needs it. And often, 40% of the time, employers say, you know what, that actually makes a lot of sense. Why don't we do that also? And that's how we make it as easy as possible for the end user to get the product.
Good. Now let's talk about the actual claims experience, right? You mentioned how slick this was and simple it was. Talk to me about what happens, how they onboard in the claim, and how's they, first off, for the client to onboard digitally, and then also what the claims experience looks like from that standpoint.
So for the client or the employer, they just need to instruct their health insurer to send us their medical claims data. On the surface, that seems like a pretty heavy lift, but it's actually not. It's very straightforward for employers who are self-insured on their medical insurance, which most employers over 500 employees are. They own that medical data, which means that when they ask for it to be directed to us as a third party, the health insurer has to comply by that requirement. We sign a business associate agreement to make sure that we're treating data in a way that is proper. When we receive it, typically on a monthly basis, we go through it, we send it through our technology, and then we literally pay out claims automatically. There's nothing more for the employer to do. In fact, versus the incumbents, one of the big benefits of our medical claims integration is that HR departments aren't fielding calls about claims. So you made a good point earlier on that because claims are hard, people have to get help. Who do they call? Typically, they call their HR person. So that's a burden on the HR person that the insurance company should have been handling. So we're making it even easier for them by basically taking away that issue. On the employee side, we've talked a little bit about how claims are automated, but just to put a fine point on this, when I say it's automated, literally the end user does nothing. Zero. That's how simple. They can set up their payment method if they haven't done that already, but if they haven't, we just send them a check. We've got their mailing address, so we can do that as well. Now, for the quarter of claims that we pay that are not automated, where the employee has to self-submit, there's also innovation we've done there. So one of the challenges with the incumbent products is that you often have to wait until you receive a bill in order to file the claim. So you go to the hospital, you come out 5 days later, you get a bill 3 weeks later, then you send your claim into the insurer, and maybe you get it paid 3 weeks after that. So now you're 2 months into this problem. On our side, we only require evidence that helps us determine the diagnostic code. And the beauty of that is that evidence is often available to you well before you leave the hospital. So you can send us your discharge papers, a photograph of your prescription, your x-rays. We'll review that, determine the diagnostic code, and pay out the claim. And often we're paying it out before you get home. When you think of making claims easy, there are 2 big parts to look at. One is the actual process of filing it. Is it mobile? Is it simple? Can you take photographs of evidence? And all of that is very important. What's even more important is how low the cycle time is, right? From the moment you submit the claim, when do you get paid? We're doing that at most within 72 hours, but typically it's happening within a 24-hour period.
And that'll, especially where basically people are tight on cash, that is, I'm sure, super appreciated.
Absolutely.
How do you see yourself enhancing this platform?
Not much. And I don't mean that in a non-innovative way, but I think often companies complicate what they do. We do a very simple thing. Our aim is to do it really efficiently and well, and not to mess with and add bells and whistles that really don't add material value. In fact, the incumbents do a lot of that, and it's for the most part pretty wasteful. Our main focus is to grow this and to get it to as many people as possible. That's the best thing we can do as an organization.
Good. So before we wrap up, there's 3 questions I'd like to ask everybody on a positive note. The first one is, if you had one wish for something to change in your company or the industry as a whole, what would it be?
Focus on value to the end user, the most important thing.
Some companies may argue with you on that one, but yes, I believe you. That is the way to success. Usually people have to think about that one for a while. So well done. Second question. What's been the biggest challenge in the company to where it is today?
Convincing people that they should focus on the value of the end consumer. I mean,
That's very realistic.
it is 100% our focus and 100% the biggest problem.
Yeah, especially because the industry's thought about it in a different way for so long. Last question for you. What excites you the most about what it is you're working on and gets you out of bed to keep on fighting the good fight?
I'm going to give you the trifecta.
Go for it.
Delivering a lot of value to consumers to solve this problem. Same response for all three of your questions, which I think in many ways just explains the laser focus we have on this particular problem.
Fantastic. Look, not surprised because you're helping people survive and get through difficult times. So no surprise whatsoever. Basically, I'd love to thank you for taking the time and keep up the good work, Veer. I greatly appreciate it.
Pleasure. Thanks for the time, Jason.
So that was my interview with Veer Gidwaney of Ansel. If you are in the U.S. market looking for a supplemental health program, please take the time to look because it sounds like, from what he's going to tell us, your employees will definitely appreciate it and your HR people will definitely appreciate not having those calls going to them. As always, if you enjoyed this podcast, please leave a review on Apple Podcasts, SoundCloud, Spotify, or wherever your podcast. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.